Tracy, we know that it's a sure thing that the Fed will, in fact, raise interest rates. It's just a matter of how much. 3/4 of a point would be what most people expect. Some people fear it might be a full point. Could that happen?
It could, but it probably won't at this point, Elizabeth. I think what's more important now, we know it's coming. Market's pricing it in. It fell off today in anticipation. I think what's more important right now is what the Fed actually says. What does Jerome Powell say tomorrow? Does he say that he's worried about inflation still going forward? Because many people think that we've topped out and then we should start to see it come down. So if he's worried about that, it's more about the language tomorrow, I think, than anything else. But you're absolutely right, and your reporter is absolutely right. Interest rates go up, it affects us across the board.
Concern here is that the Fed started late and is playing catch up when it comes to raising rates and trying to tamp down inflation, right?
Look, there's a handful of jobs on this planet I would never, ever want, and that Fed chair is one of them, hands down. That is a hard job. Hindsight is 20/20, but yes, many people believe they started too late. And now the problem is they may keep going too much because it takes these interest rates time to filter into the economy, to flush themselves out. And so they might raise way too much, maybe more than we even need to. And I think a lot of people are worried about that now, that they need to give it time to filter through the system. And because raising interest rates stops spending, and that's what they're trying to do. And so maybe we should give it a minute to see if it truly does slow down spending, because you and I both know we're feeling it. I'm feeling it at home. The Fed maybe needs to take a breath, but most likely this meeting and the next meeting, we'll see increases.
And, it's not just, interest rates on credit card debt and mortgages. I mean, for people who, aren't buying a home right now, or aren't taking a student loan right now, or aren't buying a car right now. I mean, we saw the stock market, plunge again today. A lot of people have their 401ks in the stock market, their IRAs in the stock market. What does all this mean for the average American family if the Fed does, in fact, do as expected, raises interest rates for the 5th time this year? How will this affect most American families?
You know what? Top thing on everyone's mind is how it makes us feel, right? It makes us feel terrible. And if we feel terrible, we don't go out and shop and we don't want to do things, and that, I think, the sentiment is almost worse than the action at the end of the day. The sentiment is just getting worse. We see sentiment come down. Consumer sentiment is down. Builder sentiment is down. Everyone's feeling this malaise now. And it's almost pathetic in a lot of ways that we're so saddened on this economy when, believe it or not, the underlying economic factors are still not terrible, right? Wages are still pretty good. People are still getting jobs. Believe it or not, housing prices are still better than rents out there. Like, there's a lot of plus. If you have cash on the side, many people will tell you, if you don't need it in the next, 3 or 4 years, this couldn't be a better time to buy. So there are some optimistic signs, but the problem is we don't see it because we're all consumed by the fact that, damn, these rates are going up again. And it's hard on the sentiment.
Right. There are so many good things. The job, the unemployment rate, all really, really strong. That leads me to this next question. Everybody always talks. Are we headed for a recession? By the way, all recessions are not created equal. There's a soft recession. There's a really steep, difficult recession. My question to you, are we already in a soft recession? Does it even matter what we call it?
Right. Like, that's what I feel personally. Tomato, tomato. What's the difference? If eggs are really expensive and my budget is being blown, I don't care what you want to call it. It doesn't matter what the textbook definition is, right? I feel it. That said, we do not meet the textbook definition of a recession yet. We probably will early next year. But most, again, are calling for it to be mild, like you just said, because we've been kind of going through this for a while, and this malaise will drag on for a bit. Will it be a steep, awful recession? Most likely not. But if at some point someone's going to start using the R word again, and it's, again, going to hurt sentiment.
Yeah, boy. Strap in. It's going to be a rocky ride for the next few months.
a little bit, yeah.
Yeah. Thanks so much for joining us.
Thank you for watching. Go to newsnationnow.com to find News Nation on your television provider. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.